Namaskar. Hello and welcome to P Guru's channel. I'm your host Sri Iyer, and this is a special transmission because a lot of things have been happening right here in the Silicon Valley. When we did the DGI 416 episode that I did with Sridhar Chityalaji, we were talking about problems at the Silicon Valley Bank. What we did not know was a few hours later, the bank was closed and the regulator stepped in. The $250,000 per account FDIC norms will apply, but is that going to be enough? What is the real problem here? Why did this bank fail? Is it a one of a kind failure, or is this something like a contagion which is going to spread to other banks? To know all about this, I'm going to introduce to you a new financial expert, Sri Narasimhan. He is a fintech product and platform builder. He has an MBA in finance and marketing from Carnegie Mellon University and an avid Silicon Valley watcher and participant. He believes Silicon Valley is a state of mind. A state of mind indeed. Let's welcome Sri. Sri, namaskar. How are you?
Namaste, Sri Ayerji, and namaskarams to everybody watching. Thanks for having me on your show.
Sri, I don't know what it is. All the financial experts most of the financial experts that I bring also happen to have the name of Goddess Lakshmi, which is Sri, including myself. So there is something about us and money, I guess. So, Sri, you have done some work. You've been listening to a lot of stuff going on, reading up. The last 2 days have been like crazy fast as things have been moving at rapid pace fire. I would like you to take away now and talk us through what led up to this bank, the implications and the impact. Take it away, sir.
Yes, I certainly would not profess to know everything in real time because this is I would like to say a train in motion and not a train wreck in motion yet. There's a lot of things happening in parallel, and people have sized the problem, they have triaged the issue, and it's a liquidity crunch. So, can we go to the slides?
Yes. Just 1 second. There you go. Take it away.
Yeah, the question is this a canary in the gold mine, right? And it depends upon how you look at it. Right now, the regulators are taking a deep look at this, and I believe they already have options. So, because this is a weekend, they're not moving as fast as you would like to, hear from them. But at this time, the regulators and the concerned chain of officials are taking a look. Remember, this bank is a Silicon Valley bank, so it's based in California. And so the first line of jurisdiction it comes under is the California State Regulatory Authority. And then you would have the FDIC, the Federal Deposit Insurance Company, that insures all accounts all the way up to $250,000. And then the Fed, if at all, the Treasury and the Fed, if at all they have to come in, they would step in. But I don't think it's that time yet. At this time, we are going to be we are looking at an isolated issue at this time. So can we go to the next slide,
Just
sir?
hit the right. Yeah, there you go.
Okay.
You can hit the left or right arrow on your keyboard if you have.
Okay. Thank you.
Okay.
Well,
Yeah.
hey, I'm supposed to be a techie.
That's
Thank
all
you. Thank you. So the situation thus far, as of today, is the bank is in receivership, right? This is a big deal. It's one of the largest banks in the U.S., and it serves one of the most, I would say, the crown jewel of America, right? You look at America, yes, you see everything else, but you're most fascinated by your iPhone and your Android, and all of that is made here. So there is a contagion effect of the brand of Silicon Valley, and hence the Silicon Valley Bank. By the way, it's just a name. There are many banks in Silicon Valley that serve the startup industry. This is just one of them. There is a First Republic Bank, there is Brex, there is Ramp. There are new services that are coming up that are servicing banks. There are enterprise services, SaaS services, right? You'll all heard of Zenefits. Then there is companies like Gusto and so on, right? In this whole ecosystem. Still, this bank is in a liquidity crisis. Uh, they haven't lost people's deposit, right? But in a fractional reserve banking system, which is what all banks do, whether it's a retail bank or a commercial bank or an investment bank, uh, you have what you have is deposits, and then how do you make money out of those deposits, right? And this the main business model in all banks is NIM, which is the net interest margin. And even this bank, a commercial bank, uh, slightly different business, but it collects deposits. It collects deposits from startups, from venture capitalists, from high net worth individuals, and it does something with the money, right? And supposedly it's earning interest on that money, and more interest in savings or lending that it does, and passes part of it to its depositors, right? That's what all banks do. But in this case, it had made some accommodation for some of that business by keeping some money in short-term, assets and treasuries. But most of its money was in long-term treasury. Okay, so far so good, right?
Yeah. Shall I
No.
go to the next slide?
So what happened? Yeah, we let's do that. And
Yeah.
yeah, the previous one, please.
Okay.
Yeah. So that's what happened here. Its deposits kind of went up through the roof during the pandemic and the post-pandemic world. Remember, the US responded to this differently than India. India was much more prudent with its money, whereas the US basically printed money. And we will talk about this, right? Why did the US do something that was beyond, I would say, what other countries did, and what happened there? We'll talk about that. And then, because of the shortfall of the liquidity crisis, they they had a bank run. People started withdrawing money, and they had to convert these long-term bonds because the yield curve was inverted. Right, a yield curve inversion means short-term instruments have higher interest rates than long-term, which is goes against conventional logic, right? And they were caught trapped. They were caught in no man's land, and the bank run happened, and so on and so forth. So that's what happened, and that's what went wrong here. So why is that? Why did it go wrong? What went so wrong that it missed their compliance department and the regulatory oversight? I have to say that this was a long time coming, ever since you saw the Fed governor increase the interest rates. So how is that related? So as you know, the US is generally more receptive to debt-based instruments, the credit market, right? The capital markets and the credit markets are more around, borrowing money and repaying it back. That's what they do really well. Why is that? Well, the world trusts the Fed with their hard-earned money. China keeps some their reserves here. India, part of the reserves here. Middle East, Saudi Arabia. All of these folks actually park their funds. The European pensioners, they park their funds. Guess what? If they park their funds here, what is the US going to do? It's going to spend, right? And it's spent. It's spent like there's no tomorrow. Look at this graph here. The dark line is the household and government debt to GDP ratio, right? And the gray line is the corporate debt to GDP. Now, if you just add those two combined, if you look at the graph, it's around 75 bips on the corporate, and then you have around 190, 85 bips out there. So more than 250% of the GDP, right? That's a lot of debt. And guess what? When interest rates go up by 1%, the servicing of that debt goes through the roof. And those liabilities created, depending upon which side of the trade you are, those liabilities created and those bets actually can go sour immediately. And that's what happened.
See, we can put a number on this. The United States in 2021, its GDP was $23.32 trillion. $23.32 trillion. Now, now 2.5 times that. We are talking about $59 trillion. That is the number that we are talking about. Please go ahead.
That's right. You have around $60 trillion. And then imagine you have uh, I believe 1% of that, and
Yeah.
look at that. That's a lot of money, right? That banks now have to accommodate, and if depositors ask for that money back, banks tend to lose that. Now, what's going on? What's going on is the bond price falls in value as a 10-year treasury, right? The interest rate increases. So it is basically pricing what you have today, right, versus what you will get tomorrow. And when interest rates rise or fall, in this case, uh, they fell, the price decreases, right? And when price decreases, what you're holding today, when you mark to market, it's worthless, or rather below the par value, right? And when you have to redeem that, you lose the money. And that's actually what happened here. We can go to the next one.
Yeah.
How is this different? How is this different compared to what, right? How is this different compared to GFC, the 2007 and 8 crisis? How is this different than what happened in 90s, the long-term capital management issue? How is this different than what, right? That's basically the question. In this case, it's clear that there was internal issues in the bank and there was regulatory ball that was dropped, right? But the bond market was actually telling us uh, something very clear, and they were actually ahead of the Fed, and this phenomenon is called front running. So, was it manipulation? I think it's more. I feel it's more of getting caught in the wrong place at the wrong time. Now, what can we expect going forward? The narrative game, however, is going to be played, and that's what's going to be interesting for P-Guru's watchers like you and me. We're going to be seeing how people are going to tell the same story to fit their political agenda, right? That's what P-Gurus is all about. So you're going to have an interesting back and forth between the Democrats and the Republicans, positioning this issue to serve their base one way or the other. And you can expect um, the Democrats, who have been, I would say, a bit sour on big tech and Silicon Valley. And there is a branding issue related to what is a just a banking issue. So be prepared for a lot of conflation that's going to happen. Uh, there's People are going to say, "Hey, so are you going to be bailing out Silicon Valley?" Well, if you ask me that question like that, then I'll have a different answer, right? But if they say, well, if that can happen to this bank, if it happens to my bank, what is the recourse, right? When you make that personal, everybody will be like, hey, save my bank somehow or the other. The good news here, sir, is that in this case, there was no manipulation. Money was not siphoned off. There was no corruption. There was no crazy big bets. People will still get their money back. It just depends upon time. And there is going to be other impact that I did not talk to you about, which is a lot of startups are going to have a cash crunch, and there's going to be um, employment issues. A lot of people are going to suddenly be frozen out of paychecks, which means they will be out of a job, unfortunately. So this is a real personal impact on many folks who are at the bottom of the startup hierarchy.
Let's go to the next slide, please. Yeah,
Yes.
go ahead. Yeah.
So I just pulled this up because there's an open question. The funny part is a lot of Indian startups who get their money, who are funded by Silicon Valley VCs, are actually they bank with Silicon Valley Bank, and this is the situation because banks, as you know, they like thick files. They like to see a company and it books and tries to underwrite a business the traditional way. But Silicon Valley, the nature of the game is such that you're more looking at who's funding the startup, who's funding this idea, and hence there is going to be thin files for that's taken for granted. You're going to have thin files. So what will you do if you have thin files? Where will you go? So this is an open question, sir. I would think this is like one of the most important that needs to be surfaced and has been surfaced actually by a variety of folks. Gary Tan from Y Combinator, Gokul himself, Elad Gil, a whole bunch of VCs came together and are brainstorming ways in which providing a service similar to SVB while the dust settles down.
Next slide, please.
I think, yeah, we
Okay.
are at the end. This is a developing story. We are going to be
Yes.
watching it very closely. I hope we can bring that news to P Guru's viewers as it unfolds. Really, at this time, uh, I think the magnitude of the problem is contained. There will be contagion if it's not addressed by the concerned authorities, FDIC, and then after that, either somebody from Treasury comes or the Fed will be the last option, right? And is this deemed as too big to fail? I'm not sure. I've not done my research on it. Um, there are two other things I would like to bring it to our viewers, which is uh, will JP Morgan or any of the big banks come to the rescue? Not sure, not sure. Will Warren Buffett and some private actors come to the rescue? It's more likely that's going to happen because the banking needs and the products and the services are needed. Will Elon come to the rescue? Right? There's always this default Elon story everywhere, right? There will be a white knight, sir, but they will come in after the dust has settled down. Right now, the situation is too hot for anybody to come near it, lest they be singed by it at this time.
I have a couple of questions, Sri. One is that while I was listening to a lot of these conversations, one of the things that people were saying is that just the 250K cap per account won't do because of the very fact that you mentioned that many payrolls are going to get affected. And therefore, the government at some level, whether it is the California or the FDIC, may come in and treat this as a special bank and say that you will get 250K plus half of what your account had. So, in other words, if somebody had 40 million, you would get 20 million plus 250K. I don't know if this is the one that they are going to reach finally, because this would again fly against a lot of other people who might say, hey, if any other bank fails, they might ask the same thing too. So there are some questions about that. The other interesting thing that I just saw from the tweet is that India-based startups also bank with the Silicon Valley Bank, because this is one of the few banks that does not require the account holders to have their own social security numbers. In the United States, everyone gets an SSN. Student also gets an SSN. It's not a problem. But if you are just based in India, you never came to US, you never felt the need for SSN, social security number. It's the equivalent of Aadhaar card for those of you who are curious. What do you do? And that's what I think Sri was mentioning, that there may be an alternate bank structure that people may be mulling. But as of today, next payroll is what, 4 days away, for most people. So this is a question that is hanging out there. It is expected that tomorrow there might be a press conference. I expect around, before 6 p.m. Um, Silicon Valley time,
before the Asian
or
markets start, right?
before the Asian markets open. I stand corrected. So something like that, and therefore we have to wait and see what happens. If you have something to say about this part, how much you are going to get right away, and whether there's going to be more after that, your thoughts.
Uh, you know, um, I do see the sense the sentiments of an Indian audience, right? And it is definitely a story. It is definitely something that you can say that's why I named it Canary in the Gold Mine, is it? Right?
Yes,
Is there going to be something worse? So nobody's sugarcoating anything, right? We are just stating it as it is. And as the information comes in, there's a lot of chatter, guys. So I'm pretty sure, Sriji, that P Guru should probably come back very quickly because there's so many developments happening here. So thank you for the comment,
absolutely.
guys.
Yeah,
It,
absolutely. This is not the last word that's said on this topic. We will be back
yeah,
maybe as soon as tomorrow. We'll wait and see. But Sri will be joining us for that one too. And we will be, this is a live document. This document is going to get updated. We will go back, revisit it. That way we have a story that will continuously grow from where we are. And I don't know if you have any questions today. Are there any questions? I guess not. I didn't see anything fly by. So, I guess that's all we have for now. Shri, thank you so much. And we'll be back again. Oh, there's one question. Sairam Balasubramaniam wants to know,
yeah,
did Silicon Valley bet on term structure led to this?
that's right. They took on a duration risk, and that liability mismatch exacerbated by uh, people, literally a bank run, caused this, right? That is the current narrative. Um Whether there was corruption or not, uh, I think there's been some mismanagement there. I have to say, there are strict bank laws in the US, and whatever that is, right, will be actually, it'll come out really quickly. It is the Bank Regulation Act will come out, and all the nitty gritties will come out. This is going to be, if you thought the Twitter files are some drama, this is going to be a fantastic drama in the congressional hearings, right?
Yes,
So you have the
yes,
Democrats going against Silicon Valley, rightfully or wrongfully. I'm not sure where that is, but you have big media, the organized media in the US is going to go after Silicon Valley, and that is why I want to caution everybody to watch the narratives, watch that very carefully. And if you really want, up to the date, join Mario Nafwal. He's doing a fantastic space. Bill Ackman was there today. Gary Tan speaks on CNBC. You will see CNBC in India. Um, and there's a lot going on, and every minute there's somebody called Ram Aluwalia. He's a CFA. Ram is just a very stable voice in all of this, so follow him. I have two questions, sir, actually.
yeah.
One is on what does this do to crypto, right? Where does
Yes,
crypto?
indeed. That was my next question. It was I saw a tweet here from USDC. This is a crypto company, and it has put out a statement. And you can expect more companies who have bank accounts with SVB to come out and say how much their exposure is. Maybe you can touch upon that a little bit. And we have one more question. I think maybe we'll just take that question and
There's
then we'll go
always
to Sri.
a Adani
Yeah.
Hindenburg question that I was looking for, and it is going to surface, right? When you're talking at a very high level, you're like, hey, if those guys are doing scrutiny of Indian companies, how did they miss the ball on this one? I would like to, dig deeper into that as well, because if this was a train wreck in motion, the question is, why didn't the media pick it up? Are they so compromised out here that they didn't pick it up? I mean, you have this guy called Jim Cramer on CNBC. He's supposed to be a star, and he always comes in when the horse is out of the barn, right, so as to speak. He was actually touting SVB last week, There's a beautiful clip going on saying buy SVB, and so yes, there's a lot of those kind of questions. Going back to USDC is just a stable coin, right? And it parks something like 77% of its assets. So basically, the way USDC works is it has a cryptocurrency, but it tries to maintain a one-to-one match between the token and the US dollar, right? So if you have to pass something through the
So would
system,
you say that it is backed against a US dollar asset?
it is backed only by a US dollar asset.
No, no,
And
no, no. That means, I'm sorry, I'm going to ask you a little bit more complicated question. If they put out 800,000 coins, that means they need to have $800,000 somewhere saying that this is what our backing is. So that's what
yes,
I'm
sir,
asking you. Do
and
they?
callable really quickly.
Yes, yes.
If you can
Okay.
actually look at the market cap of USDC, I looked at it, I think a year ago or something, and it was already at $80 billion. I don't know today's value, but it's available out there. What that really means
Yes.
is I don't look at USDC or USD or Tether or some of these stable coins, and the reason I don't look at them is uh, basically the there should be no risk there, right?
Yeah, 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 yeah. So let's go back to USDC's position. I read something there that made me think that perhaps they have about $3 billion exposure risk with their account in SVB. That's what I read it. I'm not a banker. I'm not a financial expert. You tell me, sir, how you see what is happening with USDC and its statement.
Yeah, yeah. As you know, none of this is under the direct purview of the Fed today, or even the Treasury Department today, right? But there have been requests for comments, kind of conversations going on the regulations. Gary Gensler, as you know, is the head of the SEC, and he was also a former lecturer at Harvard or MIT, I believe, and he knows the space. The question is, was this engineered? There's always questions, right? Was this engineered by the government? I wouldn't come out and say something like that, but there are questions out there. I'm just channelizing those questions out there, right? Um, and I would say they should not do it. They would not do something like that, as drastic as that. In the US, to the best of my knowledge, USDC has been the most um, the most stable currency, closer and adhering to all the US laws and regulations till date. So that's what I will say. Outright, I won't say the US Uncle Sam blesses USDC, but there is that exposure, and people should be watching that exposure and see where that lands in the grand scheme of things.
Thank you so much. And just to clarify, Bitcoin is not a stable coin. Is that correct?
No, no,
Yeah.
Bitcoin is
Okay.
not a stablecoin.
Yeah, I just want to let people understand what a stable coin is. It has some backed asset. It has some asset against which it backs its value, and
So
that makes it.
77% of USDC is backed by 3 months or less maturation, so it's short term, right? And if they played it well, they are actually going to get awesome interest if they played it well, right? If they
Yes,
hedged it
yes, yes.
well, they are going to make a lot of money using other people's money on the treasury assets. 23% of their assets are in banks, and a fraction of those is actually with SVB. Yeah.
Yes, and Giros wants to know: will the Bitcoin value skyrocket after all these centralized banks fail? I just asked a
Uh,
question, guy. I hope you got the answer from my
You know,
question.
you should probably dial into Dr. Ankit Shah and his program on de-dollarization. Follow him closely and look for his predictions. Right. Other than that, I would follow Balaji Srinivasan wherever whatever he says, just to get a perspective on making your own assumptions about Bitcoin. I wouldn't go here on this program and say one thing or the other about Bitcoin.
Awesome, Sri and viewers. I hope you got your information, and there's a lot that's going to happen. We most likely will come back tomorrow, if not sooner, about what happens in the next few hours, because we expect that over the night and tomorrow, sometime before afternoon, the government will have a statement of some sort. So we'll wait and see how that plays out. Thanks for watching. Please like, share, and subscribe to our channel. Also, don't forget to click on the bell button for notification. What a debut for you, Sri. I mean, I'm impressed. This is a wonderful, wonderful debut. Viewers, please put in your comments. Sri is coming here for the first time, and I want to encourage him, feel good, make him feel good that he wants to come back again and again. Thanks once again. Namaskar.